Welcome to Real World Real Estate, where we will explore, examine, and explain the real process of buying or selling real estate. Here is your host, Stephen Clyde.
All right, let's get started. You ready?
I'm ready, brother.
All right.
Let's go for it.
Everybody, Stephen Clyde here, Team Clyde Realtors, RE/MAX Preferred, RE/MAX at Cherry Hill, and your host of Real World Real Estate. So today we're going to be talking about title insurance and what is it? Everyone that's ever purchased a home has paid for it, but I would venture to guess that more than 90% have absolutely no clue what they paid for or what was done to get to that point. I'd also throw out there that probably 80+% of realtors can't explain this out to their clients effectively either, except they know they have to buy it. So we're going to be talking to Brian McGroarty from Core Title today. He's in charge of business development. Core Title is our go-to title company. I don't think I'm necessarily client number one, but I have been there since the day it opened. I've had a great relationship with their CEO and owner, David, for, it's almost 20 years now. And they are our support staff. The entire team over at Core is amazing. They do a great job. We love them. We've been doing business with them for 10 years, and they have saved our butts on more than one occasion. And they always make our clients happy and satisfied, and everybody loves being there. So let's get into it real quick. Brian, thanks for joining us. I appreciate you being here with us and taking the time out of your busy day. And so what is your role at Core?
Well, again, thanks for having us. It's always a great time to do one of these things and get on a podcast and talk to some good friends of the business. So thank you for having me on. So title insurance, simple answer. It's so the seller's problems don't become the buyer's problems. You're talking about protection, okay? You're talking about, in general, an indemnity insurance. Now, formally, I'm VP of Business Development, so you think to say, well, Brian, how are you involved in all that? Well, typically, I'm the guy that's going to find the opportunities, but the insurance part, that's where we're really getting involved with our realtor friends, just like yourself, our attorneys, our lenders. And what we're doing is we're protecting the buyer's interests so that they don't inherit the problems from the seller to them. Make sense?
Does make sense. So how do we go about that? Where does it start? So I sign a contract with my buyer. They agree to use Core Title as their title insurance part. You know what? Let me back up on that for a second.
Okay.
This is going out everywhere, and we're talking in New Jersey terms when we say title companies, right? So yeah. A title company and escrow company, can I use those interchangeably?
Kind of. I would say no, for the most part. The process is generically the same, but in each and every state, there is a whole different process. In California, it's like a 3 or 4 or 5 day process going through from, the original time of contracts all the way to close. And then you have places like Michigan where you have 2 parts of title insurance. And then there's obviously traditions that are done in different ways. So what I would tell you in general is that while the idea is the same, the way it's carried out varies by state by state.
That makes sense, right? And the way we do real estate as a whole varies state by state, region by region, it changes up. But essentially, yes, and when I'm talking to an agent in California and they're talking about the escrow company, and I'm talking about the title company here because we don't use the term escrow, we're right. Talking about the same thing, but how we're actually doing it might be slightly different because of the changes in the states.
Exactly. You have, I just did a podcast not long ago, and a friend of mine, he was looking to purchase it and acquire a piece of property and the business itself. And as he described it, said, oh yeah, we're in escrow right now. Because again, that's a process that are going by to finally get the property at the end of the day. But yeah, here in New Jersey, Pennsylvania, Florida, Michigan, those are the states that we operate in. It's really a whole collection of things that you're doing. So you're doing your abstract work, you're doing the title insurance work, which is all the way at the end, right? That's the indemnity insurance covering your butt. You're putting your money where your mouth is, if you will. Just like E&O insurance that people would get, medical malpractice insurance, very similar kind of thing. But there's a list of items that we're, knocking off and checking off the entire time to get to the final part where we actually say sign here.
Okay. So I know when we talk to people about it, we always talk in vague terms and we keep it simple. But so sure. I signed that contract with a buyer, and then Gabby's going to email it over to my processor, Core Jamie Perry. So when Jamie gets that contract on behalf of my buyer, what's the first thing that Core's doing on that? What's the process looking like?
Well, believe it or not, the first thing we're doing is actually dotting our I's and crossing T's, just making sure that the contract's fully executed. A lot of times we do get some things that aren't fully executed, which happens. Hey, we're all there. But after that, we then get everything prepared. We put it into the system, and we now go to the county clerk's office, wherever they might be. And we're talking to our sisters, say, hey, this is a rush. This is not a rush, meaning, we need to get on top of this. And they're now executing the next parts of that. And that's doing that 60-year abstract of title, which is a long search.
So you're taking that property, actually more or less the land, the lot and block, right? What we're doing, lot and block the land. And then you're looking at a continuous chain of ownership going back 60 years? Basically.
Oh, yeah. You're looking at a variety of things. Let's start at the beginning. So the first part, like you said, a lot of times people think about insurance. They think about property and casualty insurance, right? They are thinking about something that happens. Title insurance is totally different. What we're doing is we're making sure that there's no obstructions, there's no clouds on title. So again, when somebody finally puts their name at the end of the contract and says sign here, they can do that with confidence. So what we're doing is we're checking chains of title, meaning is if I have a property and then I sell it to you and you sell it to Gabrielle and Gabrielle sells it to her friend, that's a chain of title. The way I like to always describe it or have a little fun with it, it's almost like Back to the Future when Biff goes back in time, steals that baseball almanac and recreates a whole nother timeline. That's like a breaking chain of title. So what we're trying to do is find those things if they occur and then avoid them, then take the proper procedures to get that back on the straight and narrow. But there's more things to that too.
So we're going down to the courthouse and we're tracking all those deeds all the way through. And then I assume we're actually looking for liens, encumbrances against the property. Now I'm going to throw out a term that you're going to have to explain out. We're looking for the UCCs, right? So we're making sure there's no other claims against the property, I'm assuming, right?
Yeah, what you really want to do is there's a lot of parts and a lot of moving parts to title. So, the original part is, like you said, making sure that the person who owns the property, or at least is selling the property, in fact, owns it. We're also doing Patriot searches to make sure they're not a terrorist. We're making sure that all the utilities have been paid up, that they're on the right names. Sometimes we all have a moment of dyslexia. A 6 becomes a 9 becomes a 6. And some things are erroneously put on title that shouldn't be there in the first place. So there's many times that we're just going back and forth between our sellers and saying, hey, listen, does this look familiar to you? Is this something that you're aware of? This is a past lien, judgment, mortgage, whatever it might be. And then clearing that up as they come through. Now, obviously, when those different parts that it might be a cloud on title come up, we can then clear those a little bit easier just because we have all the evidence from everything that we've already had from the seller when they submitted the order. So the easiest part about that really is just kind of making sure that people aren't fraudulent, to make sure that things are paid on time, and that the things that are actually attached to that property. Like, for example, you mentioned deed restrictions. Yeah, I think you threw that in there. A lot of times people say, well, when I go into Hannaffield, how come I can't get a drink? Well, the whole town has different restrictions on there, passed down from one to the other over time. So that's where, the unique and the fun part about title insurance is that there's history involved in those searches, aside from just, finding liens and judgments or encumbrances.
Okay. So I look at things a lot when I'm talking to clients that, I'm the conductor, right? There's 30 people behind me and 3 feet tall of paper. Right. Process this all the way through between the mortgage and the title and the inspections and everything. And my job is to conduct all those people and make sure that everybody's moving in the same direction. We all have the right dates and we're getting everything done. I kind of look at the title part of it as one of your jobs or duties is, you're acting as the conduit for everybody, right? So the mortgage money's coming in, the buyer's money's coming in, and then core title is making sure that money is being sent out to everywhere it's supposed to be and everyone's receiving it. Right?
Oh yeah. Exactly. Just think of it. I'm a big movie guy. There's a funny quip or a scene rather in Men in Black where this one alien's the guy, he's like the postmaster behind the scenes, and they're throwing all the envelopes in the little holes and where it's supposed to go in the zip codes. And then he's taking that and then putting it in their proper places, just like how you as a great real estate agent are navigating things and quarterbacking deals. We're doing the same thing on our end, taking money from this entity, putting it in escrow, making sure that, this commission's paid off, this final reading has been taking place, And there's so many different moving parts that we're corralling. It's like an octopus with a whole bunch of arms, and then making sure that they're all in the same place and paid off and taken care of.
Okay. All right. So we've gone through, we've done that search. We've done a Patriot search. You guys, well, you can't go to the courthouse right now.
Right.
Or have they opened it back up again? Or is that a dependent?
So,
let's stay with Jersey, right? Because we know all the other states are completely different. So
yeah, we'll just stay in Jersey for this one. But for the most part, they're either partially open, or if they are open, they're by appointment only. Even then, they have a skeleton crew trying to, makeshift things, put them together. So in certain cases that they're just 100% closed. So what we do is, we have some tricks of the trade that we use. And we try to obtain the most secure, what's the best way to describe this? The easiest way for the buyers to have confidence that, again, when they are putting their name on that dotted line, that everything is going to be taken care of. Because right now what you have is things, the gap periods they talk about in between the time of which we can only see so much online, in which we have online access to, and to the part in which we need to find more information. It's imagine if, we're doing this podcast, we're doing this show, and then there's like 20 minutes just missing from it. You need to find out what happened, right?
That's a good possibility.
Yeah, exactly. So the deal is, we're trying to make sure that, again, when people are signing that dotted line, they have confidence and know what they're getting, because when we go past a certain time period, there's an opportunity for somebody to still take on that property, but they get that subject to those restrictions. Now, that's where you can get a good attorney friend involved to make sure that they're in the proper line, to make sure this is the best thing that it is for them, and that the risk that they're taking isn't too much. But a lot of times, too, it's just like little things. It's maybe you're in a community or a development that has a fence line that, might not be approved. So that's a restriction that you can't put a fence up there. Maybe you want to put a pool in, things of that nature, when you're actually taking on the happiness of your property and obtaining that. So sometimes it's not always as bad as it might think. You think restriction and, people start crowding up on that word, and maybe it doesn't sound so great, but I can say this is that it's not always as bad, but you have a good attorney on your side, you'll be okay.
Good point. So I had one recently where the homeowners owned the property for 43 years, right? We're getting ready to go to closing. I represent the seller, and Jamie couldn't go back that far in the search.
Right.
So the one thing that she asked me for was if the seller had their original owner's policy from when they purchased in May of 1977.
Right.
Now, luckily, and I think we probably had a 1 in 5 shot at this, maybe, but we hit the one person that actually still had their closing folder from 1977 with their original documents and everything in it. So essentially what I'm going to assume is you guys at that point went back as far as you could online, because when we were doing that, the courthouses were closed.
Yeah.
And then are taking the assumption that from that point when that policy was issued, everything was clear. We only had to go back that far. Am I reading that right? Or
for the most part, yeah. So the one thing people are concerned about is what kind of financial impact would this have on me, right? So let's say you take on this property, and typically there's a 30-year mortgage that people get. Now, if you just do the simple math, 1978 at 30 years, 2008 is usually around where that's going to stop. Even if you give some wiggle room, okay, we're in 2020. We have about 10 to 12 years on top of that. So we're not really worried about the mortgages, which is usually a big issue people might think about. But I would also say it's the other things. That gap period, remember I was saying, is like, finding that little block of time that we can say, okay, we have this original policy. Now we can see all the restrictions that are on there. So if there is something, we can announce that and let the buyer or multiple buyers, if there are in that case, know what's exactly on title. But right now, it's kind of like the idea is like, we think it might be this. We're not sure, but just want to let you know that in the event that for some reason it happens, we're not, we can't see it. So the cool thing about that is, though, too, is that once things start to open up, once you have that ability to have the county clerks open to the fullest capacity that they had before, the buyer can come back to us and say, hey, listen, you guys only did a partial search. I took it subject to these certain restrictions. What can we move on from here? The good news is we can just say, okay, now we have the full policy. We can do the complete search, And from there, we can now make a great assessment and then sign our dotted line and say, here's what we're going to support and here's what we're going to ensure. So in the same aspect, while it's not something that I think would be ideal, I think it's the best solution that we have right now for a lot of people. And that's why I would always encourage to have a strong attorney, to walk you through those things and whatever it might be, on your palette that you got to deal with in the future.
Right. And I also want to say for everybody listening, as we go through this, neither Brian nor myself are attorneys or members of the bar. And when we're discussing these things, it's from professional experience.
Yep.
We're not attempting to practice law without a license or give you any legal advice or guidance. So let's step back a little bit. We did the search, we filled the gap years. So I guess one question I would ask is, why are we going back 60 years?
Really, it's just a requirement by most underwriters for the most part. A lot of times in real estate, we have a lot of tradition, so for the most part, that's where they seem it to be the most, I guess, the best way, and when I even asked that question when I first started, nobody really gave me a good reason. They didn't say anything like, oh, Brian, it's a state requirement and here's what you have to do. It's really what the underwriters want. And, when you're an agent for an underwriter, they're the people that, make the rules for you.
Okay. All right. And, what do these searches entail? How intrusive are we being on the clients, the buyer, the seller? How deep and personal are we getting when we're doing these searches?
Not at all, because it's all public record, so if anybody wants to go to the county clerk's office, if it's open, obviously, and most of them don't have public access, but the idea is if you wanted to go see, what's on your neighbor's title report, you're more than welcome to. Now, don't get me wrong, you're going to go through hundreds of pages of documents and things that might be there. It's not as easy as just typing in an address and saying, hey, what's this property and what's currently on title. It doesn't work like that. But what I can say is that it's really not invasive at all. The most things that they're asking about is maybe a couple liens or judgments that might have been attached to, let's say you didn't pay a credit card off and that debt collector put that on, the house. Maybe you had a business that was tied to the house, whatever it was. Those are the things that we're going to ask about, things that you already know. And again, something that anybody could research. So for the most part, that search itself, we're going again through the breaking chains of title. We're making sure that there's no restrictions, there's no clouds. People are who they say they are. And from there, it's really not too much on the seller.
And when we're doing those judgment and lien searches, I've noticed that we're doing it by name, not necessarily by any other identifications, no social security numbers or dates of birth necessarily. So anyone with the last name of Patel or Smith or Jones, we're getting a phone book back, right?
Yep.
And then we're essentially taking that person at their word that these items are not theirs. So how is that working? So if there is that credit card lien, or the most common ones I see are the DMV liens against someone, or the child support liens.
Yep.
Or a lawsuit that was filed and there's a list pendant against someone. So we're taking them at their word. They're initialing off on them saying that's not me. How is that guaranteeing that they're telling us the truth?
Well, for the most part, let's put it this way. You don't really get to see what's in Pandora's box until you open it. So for the most part, when you're coming into any type of legal transaction, you are taking people a lot at their word. But in the event that something does happen, that's what the title insurance comes up for. That's where we can have all that protection. But a lot of times at settlement, they're signing off on things. They're signing off on aliases, what they might be known as, previous names, anything that might come up. We can go through all of our different databases and search and find these things. Now, the good news is that God forbid we do miss something, you do have that title insurance to protect you. But for the most part, you're taking people at your word on a lot of things. And that's where the common names, like you said, Muhammad, Smith, Jones, Brown, all those different ones, you're coming up with stacks and stacks of things. And most of the time it doesn't even have to deal with that person. So it really gets interesting when you start having the juniors, seniors, and, such and such, the fourth or whatever. That's where it gets a little dicey sometimes. But for the most part, I like to say, and knock on wood, most people are pretty honest.
I think 99.9% of us are. Everyone's got that uncle in Nigeria that wants to give us some money. So there's that,
Right.
that percentage out there. So I was going to bring this up, but you already broached on it, on the aliases and the also known as, or the AKAs. So, I have my first name, Stephen, and I consider it very common, right? But there's various spellings of it, and everybody spells it slightly different. So I'm a PH, but there's some V's out there, and there's a VEN or just VE, or STEPHEN or AN, and I've even seen people butcher and turn me into a Stephanie over it. So those additional names that come up for me that I'm signing off on when I was at closing on this house.
Yeah.
That's essentially every time someone's key punched my name in wrong, right? Like anytime someone's done something, a credit search or anything, and they typoed my name.
I imagine so. And there's so many different ways. I mean, my name gets butchered just as much as yours does. I can't tell how many times, even though it says my email signature is Brian with an I still get a Y. What did I get one the other day? Bryany. There's a Y at the end of my name. So either way, when, let's say you put on one of those credit card applications. I remember one time I did a credit application for, I think it was like an iTunes card. I get some rewards, and I accidentally put senior on there. And I noticed every single time that Brian McGroarty came in, that was a credit card. But then eventually I was like, you know what? I don't need this thing anymore. I got rid of it. But what do you know? All of a sudden they started selling my information. So all that mail started coming in as Brian McGroarty Sr. So I was like, oh, now I know who you talk to. But at the same time, you're signing off on those aliases. It could be a variety of things, credit reports you fill out, anything that probably has checked your credit at one point or time, I imagine would fly on the radar, or even, maybe how you file taxes, where you were at. Maybe you put your name on rental applications, business applications. It could be a variety of things. So one thing I would just say is tell people, if you want to avoid signing off on a lot of stuff, just use the same name.
So using multiple names would make things complicated down the line.
A little bit.
That's fine. That works. Yeah. So we've gone through the searches, and then, as agents and professionals, we get the title commitment back. So explain that. What does that represent in the process? Where are we at that point when we're receiving the commitment?
That's the part where we're putting our money where our mouth is. We've researched everything, anything that was public record, any utility companies, restrictions, deeds, whatever things that might have appeared in our huge abstract of title and the various entities that we had to contact. That's where we're saying, hey, here's everything that we found. And here's what we're committing to, commitment,
right,
based off of that information. And here's what we're willing to insure in the event that something happens. Now, sometimes when you have policies, there are certain things that, title companies will have a restriction or they're going to have an exception to. For example, a lot of times when you go to, let's say, new construction, there's liens or judgments that might be from a previous lawsuit that construction company had that were saying, hey, listen, that has nothing to do with this or that, but I just want to let you know this doesn't carry over. There's always something, a give and take on that one. But what I can say is, that commitment, again, is the title company putting their money where their mouth is and what they're going to insure. And they're going to literally bullet point it out for you.
So speaking about the new construction, I had one of these 6-7 years ago, where it was a bad builder. So, and we won't use their name or the location.
That's fine.
But we actually, and we were using a HUD-1 at that point.
Oh, the old HUD.
The old HUD. It was so much easier. So it ended up being 7 pages long. And as that's normally 2 pages, right? Yep. Because the builder hadn't paid anyone.
Right.
From the painting contractor, electrical contractor, all the way down to the cleaning person.
Yep.
They all had liens against the property that had to be satisfied at the table. So that's part. One of the questions I was going to ask is, does a buyer have to buy it? Right. In other words, I know if I'm getting a mortgage, the mortgage company requires it and I have no choice. But if I'm paying cash, do I have to take out title insurance?
No, you do not. It's not required. And you mentioned the golden rule of real estate. Whoever has the gold makes the rules. So if somebody's giving you their gold, you bet your butt they're probably going to say, you're going to need title insurance. If I gave you $200,000 of my own money, I would make sure that you would be paying that off and that it was probably one of the most secure investments I ever had. So the lenders out there, they're doing the same thing. They're just making sure, again, you are who you say you are. You're using it for the purpose that you said you were going to use it for. And the investment that you're actually putting it towards is fairly sound. So, I think we can all agree on that one. That's not such a bad idea.
No, it's not. And the mortgage company also wants to make sure that they are definitely in the number one position.
Correct.
As the lien holder, right? they don't want to find out a month from now that there were 3 liens in front of them when we went to settlement on that property, and they're in third position when they thought they were in first position.
Oh,
And
yeah.
that's kind of what they're requiring us to go through you for, is to confirm that no one else has a claim on this. You're secure in your collateral, basically.
100%. Yeah, there's anytime when you're talking about positions. So imagine, let's say you and I go into business and we're buying a property together, and we get that first loan, right? That first loan is going to be at the top of the pool there. God forbid something happens, they get to collect everything first. Well, let's say we get a little line of credit, and then that's added on there. Then we add something else, and that's added on there. Now you're literally making a deli line of different people behind them, first, second, third positions. So when you're saying that they need to be at that first position, that's the best position for any debtor or any lender to have, because they're going to get their money first. They're going to get their first crack at whatever might be left. So that's the kind of position side of that. And at the same time, too, it's also good for investors to realize what position something might be foreclosing upon, if they're going to an auction sale, if they're going to a foreclosure sale, whatever it is, because that could be the difference between you having the ideal steal or an absolute mess on your hands.
Right. And so we went to a title company, and it was a builder mandated title company. So it was one of the few times I didn't use you guys, but so they found all the liens, obviously recorded, and they cleared them. But if that buyer had purchased just directly with the builder, not gone through title, when she closed on that property, those liens would have became hers, correct? Right? Because they would have stayed with the property, and she's now the owner of it.
Essentially, yes. Anything that's on those titles, a lot of times when you have, like you talked about the builder example, let's say they're using these different type of vendors, like the electricians, they're using this. They don't always have a top-down construction crew that's doing everything. So over time, people are going to owe somebody some money. So what they do is they put a lien on there, but sometimes they'll do a blanket lien. So now imagine you and I are huge developers, and we have 140 potential lots out there that we're going to sell. They're going to put a lien over every single one of them, so they make sure they get their money. They're not just going to do one; they're going to do them all, which is smart. Obviously, we would all do the same thing. So, yeah, to put your statement in perspective, I think that people just need to make sure that they are seeing what they're seeing is in fact the best for them. And the reason why I say that, and I say that in a generic way, is because I did a nice deal with a local builder. Actually, I can't say local; they were a national builder. And the first thing I told them, I said, listen, I'm sure there's a whole bunch of different things and I need to know about this property. Send me everything you got right now. Before we'd even do one deal, send me everything. I want to know about any lawsuits you have, any things that are pending or whatever. So then when I sent that back to my underwriters, we had a whole process ready to go. It wasn't like, well, what's this? And then what's that? And what's this? It didn't drag down everything. But in the same sense, I would say this is that real estate's very local. You'll say the same thing, is that use the people that you trust. Rely on your realtors, rely on your lenders, rely on your attorneys. They're going to give you the best advice. And in certain cases, sometimes it's just something you can't pass up. A good friend of mine just he bought new construction over in Newtown, and they just closed on a beautiful home. And the best part about that is that they got all these different incentives to use them. And he's like, Bri, I want to use your lender that you recommend, but I'm getting $14,000. And I was like, hey man, I get it. You got to do that. So sometimes it's not so bad. And for the most part, we all, as title companies, I can speak for, adhere to the same rules and guidelines and regulations as everybody that's out there. But don't get me wrong. Are there good and bad title companies? Sure. But what you can say is most of the time you're going to be okay.
I would say that there are good and bad out there. The good, the bad, and the ugly, as I always say.
Yes.
I think the forward-facing side of probably 100% of them looks good. So the public never sees the bad and the ugly part.
Right.
That's the inside baseball part that as professionals, we all see, right? And we bang our heads against the wall.
Oh yeah. And everybody knows about them quickly.
Very quickly. I mean, listen, Gabby wasn't even here 7 months when she realized who one of the worst ones in the area was, right? And started cringing when we got those confirmations of order from them. And they're local and they're less than a mile away from you. But so, all right. So we've established that, it's a good thing to have, that if we go into a real estate transition without it, we're taking on a lot of potential risk.
A lot.
And we're exposing ourselves to financial hardship ultimately, because we didn't have those things cleared necessarily and we're not insured against them. It is a big number in the closing costs, right? The owner and lender policy when they come through.
Mm-hmm.
Now, what is the difference there, right? Because for every, I would say 95% of people are getting mortgages, and you may probably higher than that. So there's two line items on the settlement sheet when we're reviewing of our client. There's the lender title policy and the owner title policy.
Yeah.
They're two completely different premiums, right? They're vastly different from each other. Are the coverages the same?
So essentially what you're really looking for is the lender's policy obviously is going to protect the lender's interest.
Sure.
And that number is solely based off of the loan amount, right? And then you have your owner's policy, and that's based off of how much the down payment you're putting down. So there's three things most of the time that you have to deal with, let's say in New Jersey and PA, Florida, Michigan, the states that I typically take care of. You want to get the address, the loan amount, and the purchase price. Those things are going to dictate your entire amount of your premium and everything else. And all those fees that come along with it are regulated, again, by the Department of Banking and Insurance in each and every state. So there's really not much wiggle room. It's not like, you have a really great credit score and all of a sudden you can get a discount on title insurance. It doesn't work like that. If you're Bill Gates or you're a bum on the street, it doesn't matter. You get the same exact rate as everybody else. And the cool thing is there's different coverages that come along with that. But for the most part, for where people are really using, just buying a house each and every day, my underwriter probably is going to hate when I say this. You really don't need it. You don't, in my own opinion. Now, don't get me wrong. Are there extenuating circumstances that might protect you? Of course. And that's where I would say seek legal counsel to make sure that you're getting protected properly. But there's something too that I wanted to talk about if I could go back.
Sure.
We were talking about, title insurance, and sometimes people think that, you can shop around for it. Sure, you can. You could probably get a couple dollars here and there. Okay, I get that. But it's really not based off of also square footage. It's really based off of, again, those factors I mentioned: purchase price, loan amount, location. So like, for example, I'll tell you a quick story if I could. I was chatting with this one gal and she said, "Bri, hey, listen, I'm buying this lot of land that's next to my house. I'm just going to put a garage and a driveway on it. It's going to be all great. It's my neighbor's. It's really small. What can you do for me on title insurance?" And of course, since it was so small and the amount, I think she was buying it for like $5,000, $7,000, something like that. It was the bare minimum that you would get. And she goes, "Well, geez, that's a lot." And I said, "Well, let me ask you a question. If there was a $10,000 lien on that property, what would you think about, with regards to, the couple $100 that you're probably going to be spending on title insurance?" And she goes, "Well, I don't understand what you mean." I said, "Tell you what, I'm going to do a search for you. I'm going to tell you exactly what's on title right now. I'll be back with you in a couple days." I did the search. I got it back. And wouldn't you know, there was all kinds of liens and judgments that were attached to that property and their neighbor's property, between tax liens, some utility liens on there. There was credits, debtors, everything. It was over $30,000 in liens just attached to that one parcel of property that, again, you could put a shed and a driveway on. So it really doesn't have to deal with square footage or small spaces. It's really what's attached to that property. Like you said, the lot and block.
The lot and block, right. So I'm going to go back to where you said the owner's policy is protecting my down payment. The lender's policy is protecting the loan. So
Correct.
If I'm putting FHA and I'm putting down let's say it's a $200,000 home, I'm putting down 3.5%. So my out-of-pocket investment into this is $7,000. So that owner's policy is insuring my $7,000. The lender's policy is insuring the $193,000 loan I'm taking out.
Mm-hmm.
Now, does that 190? So as I pay down that loan, right? Because these policies stay in effect, and correct me if I'm wrong, until I sell the house, right?
Correct.
I'm insured for my entire time of ownership.
Right.
So the 193 stays at a 193 policy, right? It doesn't go down as I pay it down.
No, it stays there. So like, let's say, easy numbers again, $200,000. Let's say court title, God forbid, happens to miss something. And it's, again, easy numbers, we'll use a $10,000 tax lien. So then, you call me up and say, "Hey, Bri, there's this one particular lien we missed on one of the transactions, et cetera. Can we look into it?" What do you know? We find out we did miss it. We write a check. So let's say it was a $200,000 policy. It's now going to go down to 190, and then it stays there until, God forbid, something else might happen. Now, the good news is we're really good at our job, and we really don't get a lot of claims, if at all. I'm knock on wood right now as I say that.
Right.
And, we don't have to worry about that too much. But the cool thing about title insurance, it's a one-time thing. It's not an annual thing. It's not a monthly thing. You purchase it when you get the home. if you really look at it, how much, let's say you roll it all together and you finance it with your mortgage, you're talking at like $4 or $5, $10 a month that you're really financing over the course of a 30-year mortgage. Right. So in the grand scheme of things, it's really cost effective for what you're getting out of it.
Okay. So I also want to back up a little bit because we keep throwing around the term title, right?
Yeah.
We're inside baseball, and that word has different meanings depending on where you're applying it, right? So I always use the example with cars, right? A title to a car is ownership. A title to a home is how we own it.
Correct.
Is that basically it in a nutshell, or am I missing something there?
Oh yeah, there's different ways that you can take title, as they say, and you can do that with rights of survivorship. You can do that by passing it down. Like, let's say you and I own a property, and you want to take title. I pass away, and then it goes to you, and then or it like solely like the whole entire property. Or there could be other things where it goes to my heirs. So let's say again, you and I own the property. I pass away, it goes on to my wife and my kids. And then now you're partners with them all of a sudden. Now, obviously, certain business owners might not like that. So they're going to pick the proper way to take title as well.
Okay. So that's the form we're checking off at closing. So joint tenants with rights of survivorship is what I always call the I love you. It's what a husband and wife get by default, right? And we each own 100%. You can't separate us. When I pass, it's 100% my wife's. Now, is that the same as tenants by entirety?
Now, see, that's where it gets a little different. That's where I would say
that's the legal side.
Yeah, that's the legal side. Just because when you get into taking title, I would say that the one thing you need to worry about is what's your goal with that property.
Right.
Are you selling within 2 to 3, 4 years? All right, we'll take it as everybody else does. Is it something you're using as an investment? Okay, sure. You go down that route. Is it something that you're using for commercial purpose? There's so many different ways. So what I could say, the best way to do it is contact somebody that knows real estate inside and out and backwards, and make sure they have a law degree. So my best advice for you on that one is find out what your goal is first, what your why is for having the house or the building or the property itself.
Okay, and then discuss it with legal counsel or tax advisor, whatever may be best for you moving forward.
Correct.
Okay. Correct. That works. Good answer. So you mentioned briefly exceptions or conditions. I always refer to them as exceptions. So I've seen it where we get the survey back and there's a fence line off, or there's a shed that's over the property line.
Encroaching.
It may be this property shed that's over the property line, or the neighbor's shed is 3 feet over on the property line. And the same thing with the fences, right? Especially in the older developments, we see crooked fences, because I always joke with people that, back in the 50s and the 60s, the dads all went out to put up the fence together. Yep. The one they started at 8 o'clock in the morning was perfectly straight, but by the time they had some beers over lunch and in the middle of the afternoon, that last one kind of racked a little bit and wasn't as straight as it should be. Yeah. So those are the things we're talking about on the exceptions, the things that are encumbering the property that shouldn't be there, and you're noting them out to us and bringing them to our attention.
Sometimes, yeah. It could be, encroaching, like what you were talking about, like a fence line or a garage, or even a piece of the building or structure that's hanging over on somebody else's air rights of the property. But then there's also times where, you can have encumbrances and certain parts of the deed that it announces what's going on. Like, for example, let's say PSE&G needs to run a line that happens to go over the corner of your lot. Well, then that's going to have to be on your deed. That's going to have to be shown. A funny story about the fence line. I actually lived next to a church and one of my homes, and they started at one side, and then as you went maybe about, let's say 100 feet, I'd say by the time they got over to it, they were 6 feet over on the church's lot. And then one day the pastor comes knocking on my door and says, your fence is on my lot. And I was like, what are you talking about? It's been there since I got here. And he goes, no, we have the survey. And so he shows me the survey. And of course, we read the fence. We got some nice vinyl fence and everything. That was fine. But things like that happen. Or sometimes you have shared driveways, real big on, close-knit communities where you don't have their own spot. Like there's some spots and friends in Haddonfield where, you have those Y kind of driveways where you both go up the same entrance, and then one goes off to the left, the other goes off to the right. And, you're now sharing the responsibilities of that driveway. Now, we all know some people don't really help out when it comes down to, snow removal and things of that nature, but that's part of title. It shows you those things. It exposes those things. So you're very well aware that this isn't all yours. It's shared, but those things can be changed over time. They just need to be agreed upon.
So then buyers that don't obtain a survey are exposing them to other possibilities that are unforeseen, right? Because you're not going to pick up a differential on the fence necessarily with your eyes. Sometimes you can, but sometimes you can't. Yeah. So getting a survey is really integral into getting a really good, clean title.
100%. 100%. I would think people say sometimes it's not always necessary. Sometimes you can get the survey done previously from the seller if it was done within a certain time period. I would say it's well worth the $400 to $600 you might spend. Obviously, you can just get a basic survey done. You don't need to have all the shiny markers and things on your property. That's obviously, some people like that. But in my own opinion, I think it's pivotal that you get a professional to come out and check fence lines and check those things, because things could have changed over time, especially if you have eroding, property. So that could have been changed over time. There's so many different things. So I would say anytime you're purchasing a property, get a survey done. It's well worth it, because the thousands you're probably going to spend to fix it, to do whatever you need to now, is a lot better than the $400 you could have spent and known about it, prior to.
Yeah, we just had one. Jamie sent us the survey on where it's decades ago, right? There's no way this could occur today, but the house was literally built on the property line.
Oh wow!
So to get into your front door, you had to walk on your neighbor's property, right?
Yeah,
it's literally dead on the line, right? No gaps, setbacks, nothing. But what was really integral about that, and it didn't really affect the title because it didn't cross over, but it allowed us to see that, this is a pre-existing non-conforming condition.
Right.
For everybody listening, that means you have something that's been there for a long time and doesn't meet current code, so you're grandfathered in. But if that house were to have caught fire or needed anything up to 50% of rehab work, it had to be torn down and moved back into the middle of the lot where it belonged. It just couldn't be rebuilt again. And which gave us the ability to get out of that deal, right? Because that's a danger mode. So the title process and the survey process, helped my client in a $125,000 investment that could have been detrimental down the line.
Right. And just kind of like we were alluding to a little bit earlier in the conversation, the reason why that investor was purchasing the home, there was a specific way in which they wanted to earn their money and use that property. And now they're going to have to spend thousands of dollars on top of whatever the ideal deal they thought it was. So now it doesn't work. So that's, again, where title kind of comes in. It's a little bit of the geeky side, the history side of the real estate transaction. But the way I look at it is you got to know, what you're doing in the future by knowing the past as well. And that's what we do.
So you guys do more than just feed us on Friday afternoons at the end of the day.
We do a couple more things. I'm proud to say we help out our agents the best way we can, all of our lenders the best way we can. Yes, we do feed people. We love bringing people in. Obviously now with COVID, we're taking different precautions. But if you tail back, let's say 7-8 months ago, you would walk into Coors Title. It's a vibrant place to go into. It's very warm. It's very welcoming. There's bagels, coffee, Danish in the morning, juices. On special days, we'll have, breakfast burritos and things of that nature. I remember during the Super Bowl times when the Eagles were in the playoffs, we were having Philly cheesesteak rolls and things like that, things that really go off that people love. And more so, it's not just to, bribe people to come in and sit in our office. It was really more along the lines of we get that people are putting their lives on a moving truck and they're getting everything done and they're listening to every piece of advice that you have and their attorneys and their lenders. And they might just forget to eat that morning or that afternoon. And so if we can give them, some couple bites of a cheesesteak egg roll or something of that nature, then great. Let's do that. So I found that in general, us doing that, it's made for a really fun closing.
I think it's great. I mean, as a whole, right, we're talking about one of the top 5 most stressful things anyone can ever do in their lives, right? Buy or sell a home. It's extremely stressful. It's extremely tense. People are dealing with, for the most part, sums of money that they've never dealt with before. right? They've never signed this kind of debt before. They've never brought this large of a check anywhere before. As you said, their possessions are all in a moving truck.
Yeah.
And what I found you guys do is you create such a relaxed environment, that's fun and jovial, right? And it's not, and it reduces that tension and that stress down a little bit, that people are kicking back with a cheesesteak and a cold soda or, breakfast sandwich and a coffee, and they're relaxing a little bit and enjoying the process instead of being in a styro conference room with people just handing a stack of paper to them.
Exactly. Yeah. And think about it, when you're purchasing something like this, probably one of the biggest purchases you're ever going to make in a lifetime. Wouldn't you want that to be a very memorable, positive transaction, positive experience? I believe in general that, sales comes from relationships. Relationships comes from good experiences, a good vibe. So anything that we can do to make that a memorable, positive experience for our buyers, our sellers, our clients, that's what we're going to try to do.
All right, cool. So talking about COVID-19, and I've been showing up for closings during the entire lockdown and quarantine, but I'm not going to go into it. So, we've got spikes in cases, and you've got offices around, down to Florida, out to Michigan. So you've got offices that are in hot zones or places that are getting more back to normal. Mm-hmm. What are the precautions that CORE's taking for those buyers and sellers to make sure that while they're going through this process that they have to go through of settlement, they're not exposing themselves to risk, or we're reducing it as much as we can, I should say?
Yeah, the first thing you think about is our essentials, right? Our closers, our processors, the people that work for CORE. Those are the gals and guys that show up each and every day, and God bless them, they're fantastic at what they do, but they are extremely valuable to us, so we wanted to make sure that they were okay. Well, luckily, when the CORE title was founded, we became a cloud-based company. So when they need to go home and they need to be near their kids and take care of their kids because there's no daycares open, or a family can't watch them, whatever it is, then they have the ability to do so. Now, don't get me wrong, as we've all experienced, it's still a little hard with having your kids, your grandkids running around with you and still being on a conference call, but at least, hey, you can be near them and see them. And then the flip side of that, too, is that we tried to do anything that we could, if we could control it, to make people feel safe. So each and every time that we have a settlement and it's in-house, we're always wiping down all surfaces. That's a given. We do that with the best and strongest we can, obviously without the whole entire place smelling like bleach. But in the same sense, we've gotten rid of the coffee bars and the fun stuff like the cheesesteak egg rolls, just because that's a common zone where people are going to gather. So we didn't want to entice people to gather. We wanted to keep and practice social distancing. When you walk in, you're going to see a sign that says, hey, we're practicing these certain protocols. Right now, we've even incorporated a little laser thermometer, so people know their temperature, just in the event that, God forbid, that they don't even know that they're having fever. Then we can say, hey, listen, we have another option for you. We're going to bring the whole show to your car. So when you come in, we can slide things through the window. You can sign whatever you need to. Just give it right back to us, and now we have a car side closing, and it's still just as good. Now, don't get me wrong, little the bells and whistles and the warm and welcome things that we were talking about a few minutes ago go away. But the way I look at it is, hey, at least you're able to purchase that home. Right. You're able to save a couple $100 on your refinance, and you can get the deal done.
Well, great. I've always felt safe, and I think it was as smooth as it could be during those 3 months. And we didn't miss a beat. We didn't miss a time. We all closed on time and got everything done. We were a little bit further apart from each other, and we all weren't having a good time at a table. But, right. I think we've got some really cool closing pictures from that time frame with everybody gloved and masked and social distance. So before we start to wrap up, what are some of the most common questions that you guys receive at CORE from clients that maybe I overlook because I'm too close to things, right? What are the normal questions that are being asked? What is the normal confusion that we have to overcome?
The first thing is just typically everybody thinks that you can shop around for title insurance. And I'm not saying that you can't. I'm just saying that it's not as easy, or it's not the same way you would do it for property casualty insurance like you would do with the Geico or Progressive. It's not about who's got the best rate. That's just not how title insurance works. It really comes down to the relationship, the energy, the experience that a title company is really offering. And I think that's where we shine above everybody else is we have over 400 plus years of aggregate closing experience. We have the best of the best examining every single one of our policies. My underwriter sits in house. So when I have one of those tough deals, I literally walk over to Chuck. He's like my title encyclopedia. And I say, hey, Chuck, what do you think about this? And we make a determination right there. We're not sitting in line on some list of, everybody at my underwriter. We can make those, tough judgment calls. So that's kind of really where we stand out and separate ourselves. But for the most part, we're just trying to adapt just like everybody else, wearing our gloves and our masks and trying to keep people safe.
So talking about the shopping, it's my understanding that all of those rates and fees are set by the insurance commissioner of the state of New Jersey. Well, at least here in New Jersey. And that's to protect the consumer so that there is no gouging or undercutting or RESPA violations or anything like that going forward, that everyone, including the closing in the state of New Jersey, is paying the same thing and they're getting the same thing.
Exactly. Right? Now, don't get me wrong. I run into some title companies that have been insured by, financial conglomerates. So they weren't underwritten by, we call them the big five underwriters, Stewart Title, Chicago Title, there's a whole mess of them, North American. But when it comes down to that, it scared me because the title insurance, estimate that I was competing against was significantly less. And I'm not just talking like $50, $100. I'm talking like $400, $500, $700. And then I started researching the company and I realized how they were structured. And it was just basically by a whole bunch of people with money saying that we're going to bank that nothing ever happens. Now, here's the deal. The buyer ended up using that title company. God bless them. It ended up being a 4.5-hour closing. The notary that came there that one day had nothing necessarily to do or was employed by that company. They were just hired. So they had no idea what was going on with the transaction. They were constantly butting heads with my client, the realtor, throughout the entire course of the transaction and the settlement. So it made for a really tough experience. Don't get me wrong. I'm sure there's probably some good ones out there. But what I can say is that's the difference between your realtors and your lenders and your attorneys, knowing the best and the brightest out there and why you should probably use them.
Well, it's funny you mentioned that time frame. I've had numerous customers that tell me, oh, do I have to take a half a day off to go to closing? And I'm like, no, we'll be done in less than an hour, right? If everybody does their job right, 35 minutes, we should be finished and you should be on your way. Yeah. We may sit around and talk over coffee a little bit and everything, but you do hear that's like the 4.5 hours you brought up, or I've heard 6+ hours. Just horrible, right? Just nothing in place. All right, good. So
can I interject real quick on that one?
Yeah.
So back in 2015, they changed around a lot of our process and the way that we handled it. We alluded to the HUD-1, back in the day we were used to rather. But I'm sure you remember those closings where we literally got up to settlement and we didn't have a mortgage package yet. We were just sitting there waiting for things to be funded. So sometimes you would sit there and wait until that funding happened. And sometimes that could take half a day, a whole day. But now, since those new rules and regs have been put into place in 2015, we really avoid a lot of those hurdles. And so 3 days before the actual transaction, we're taking care of everything. You know exactly what you're paying for. You've already seen the closing disclosure. It's a bifurcated closing disclosure, meaning the seller gets theirs and the buyers get theirs and nobody sees in between. As you can imagine, when you had everything on the same sheet, sometimes that caused a little bit of a war at the settlement table, just because when somebody was getting $500,000 back and they were arguing over a $500 fix on whatever it might be, it made some contention at the closing table, as you can imagine.
Yeah. So, I mean, like I said, you guys do a great job, and there's a lot of others out there that do very good jobs, but it shouldn't be a long, drawn-out endeavor. And all of those quotes should be within $25 of each other for the most part.
For the most part, they should be fairly similar. Maybe $50 here and there, depending on what fees or things that they're eating. But most of the time, everybody's dealing with the same pass-through rates, pass-through fees that are coming from various entities. What I can say is we always like to overestimate our quotes, just because we don't want to become part of that. Like, when you always joke around and you're going to the mechanic shop and you say, I just want to get an oil change, and you come back and you get 4 new tires. No, we're not trying to do that. We're just trying to show you everything that might possibly be there. But 99% of the time, it's going to be a lot less. Yeah. So we just want to give people the idea of here's what you might pay, but it should be a couple dollars lower than that. But yeah, to your point, I got my name all over, not my name, Brian McGroarty, but Core Title's names all over pens, pads, notebooks, and papers and things like that. The way I look at it is, if you notice that my name is everywhere, Core Title's name's everywhere, the closing took too long, in my opinion.
Pretty much, yeah. Yeah. All right. So before we wrap up, we're going to ask you a couple questions. And one of them is what we call our tales from the field, is the crazy, outlandish stories that happen. Unfortunately, most of mine have occurred inside title companies, right? So, that affidavit we have everybody sign, you're 18 years of age, you're married to each other, you were married on. And then that last question at the bottom where it says, do you have any outstanding child support judgments against you? I was sitting at the closing at the table. I think there was 8 of us around the table at that point.
Yeah.
And that's when the husband asked me if that was a legally binding document. I'm like, well, yeah, it's an affidavit.
Right.
Well, at that moment is when his wife found out that he has child support outstanding for a child that she didn't know existed.
Oh, man.
Now, I tell everybody, at that moment, if it was a buy side, the deal would have probably died instantaneously. But the plus side was, as we were about to enter into a divorce situation, we were already selling their marital assets. So we streamlined the process for them a little bit. But that did take a little bit longer because they needed like 45 minutes in their own room to talk to each other.
Right.
And then she remained in that room as we finished the closing.
Yeah, I can imagine. In fact, I'll give you a story on the reverse of that. Just recently, I was talking to a good friend of mine, and she was telling me about a purchase closing that she had. And these 2 young buyers, they were, ready to close, and they were waiting for something. Somebody from the other room to come in and like printing up something. I'm not sure what it was, but the husband starts texting somebody and writes, "I love you" to them. And the wife looks at that and goes, what was that? And then it ends up being some gal that he might have been seeing on the side. Here they are closing on their property at the settlement table, and he's telling some other girl, "I love you" or whatever. So, I don't think they're going to be staying in that house too much longer. So things happen.
Yeah. So is that your crazy tale from the field?
That's the most recent one. I'll give you that. I'll allude to a couple. I've had a couple of those Jerry Springer moments. I remember one time, there's just a funny moment, a settlement moment. I walked in and, in our conference rooms, we have those little windows you can see in. Yeah. And I could tell that the buyer and seller, they were just kind of weird. And there's an older gentleman. He was the seller on the other side. I'm sorry. He was just kind of like, old man Windsor. And I didn't understand what was going on. He was just kind of being a grump. And just out of nowhere, I hear, "There is no F and K." And I was like, and I just look over, and what happened was that you have these young buyers, and they're just inquisitive and asking questions about the house and whatnot. And they said, "Well, can we have the key? We're ready to, move on." And that's when he got up and said, "There is no F and key." And it turns out what happened was he dropped the key in between like his deck or something or whatever it was. And they're like, "Well, how did you get in and out of the house?" And he goes, "My grandson lives around the corner, and I just boost him through the kitchen window and whatever." But then he started getting like crazy about it. I'm like, "Well, bud, calm down. It's not a big deal." And then the realtor's like, "No problem. I got the lockbox. Here's the key. We're all good." But it was just kind of one of those funny moments that just like caught you off guard, but it started with just some weird tension and then, that outburst. But,
I would say that we're psychiatrists, marriage counselors, and everything as we go through this process. And, we learn little bits of the story as we go along. And a lot of times we get the conclusion and a twist ending as we sit down at the settlement table, right? And learn everything.
Oh, yeah. It all comes out.
Brian, I really want to thank you for coming on today. Before I let you go, I'm going to ask you some questions that we're asking all of our interview people.
All right.
A little bit of this from Inside the Actors Studio and Brian Buffini. But just some rapid fire, just answer with what comes off the top of your head or if you know it, just throw it out there. But what's your favorite and least favorite words?
Favorite word? Probably Kristen Holloway always makes fun of me, because they call those crutches that you always fall back on. And there's a lot of times I'll just say, "Okay, I guess so," or something along those lines. And then, she starts, I'm even forgetting the word. She's going to make fun of me for forgetting it, but I have a couple crutches that I fall on. So we'll go with that one. Least favorite word. We'll just call it can I use a phrase instead? I hate when people say, "I'll try my best." Just either you do it or you don't, in my opinion. So when people used to tell me when I was a young kid, "I'll try my best," that means they weren't doing it. So I just have a little twig, anytime I hear that.
So when the family's away and you've got the house to yourself or the office to yourself or you're in the car alone,
Okay.
what's that tune that you crank up and you just jam to and let go and you think you're a singer and you're really not?
Right now, The Weeknd's got a good song out there. I'm sure Gabrielle might know it off the top. I'm terrible with no stuff, but anytime Michael Jackson's playing, I'll probably interrupt the middle of a conversation and go on the dance floor. I love Michael Jackson.
Nice. Well, you can't miss with Michael Jackson. I mean, you know.
Oh yeah, Billie Jean, any one of those.
Forces me on the dance floor too. It's an ugly sight. I mean, you'd rather watch Elaine and Seinfeld, but so we all have that one movie that if we're walking through or if we see it on TV, we've seen it 20 times, but we're still going to sit down and watch it no matter what part that movie's at. So what's that movie for Brian?
Shawshank Redemption.
Really? Your own little private, what was the place in Mexico? Is that in Yahoo or is that in Yahoo or?
Oh man, you got me on that one. You got me on. I know that the ending scene is fantastic. I love that. But yeah, that's one of my favorites. Shawshank.
That's a great film. Really good film. So what's your favorite book?
Oh, Think and Grow Rich. Napoleon Hill.
I just bought a new copy of it because I couldn't find my old copy.
Oh
it's
yeah,
a great book, right? And everybody misses the first two parts of that title, right? Everybody wants the rich part. Everybody forgets think and grow.
Yeah. Oh yeah. Now it's I love the audio version on that one because not only is it narrated, but there's certain excerpts that come directly from Napoleon Hill, and I get past recordings that he might have had in the early 1900s. So that's a good one, audio version. Check it out.
I'll have to check that out. I definitely will. And then, what noise do you love and hate?
I'll start with the one I love. I love the sound of a golf ball going into the hole. That just if I could have that one, that would be great. The sound I hate, man, that's a tough one. Probably like that old school alarm clock, not like the bell, but like the beep beep, like that low.
Yes,
that's
annoying.
That's all my youth and middle school and high school. All my alarm clocks were like that, and so I think that's just a point of
horrible. I agree with that.
Nails on the chalkboard for me.
So what's on the top of the bucket list?
Oh, I'd love to play at St. Andrews Golf Course. I'm a big golfer, love to golf. The old course, it's fantastic. It's beautiful. There's a lot of history to it. So that would be a goal of mine.
Is that an actual public course or is that a private course you need to be invited to?
I believe it's a semi-private. And the only reason why I say that is because there's a few friends that I know that have spent a couple dollars to go part of a whole thing that they do. But I imagine a lot of the years it's probably blocked off because it's such a popular course and destination.
That's a great bucket list spot. And then what profession other than title that you're not currently doing would you love to do?
Oh man. I would love to be a like some type of sports psychologist or agent or something like that, because I love sports, I love competition, but I have a degree in psychology. So I love the reason and the way people think the way they think. And I really got into sports at a young age, but there's, professions, baseball players and tons of history where you find that these guys have put routines in place just to get past their own mental block. So I would love to had some type of job that dealt with that at some point. That would have been cool.
That's very cool. And this one I love, actually stole this from the Actors Studio. It used to be on Bravo.
Okay, so I remember.
If heaven exists, what would you like to hear God say to you when you arrive at the pearly gates?
I'm proud.
Nice. That's a good one. That's a good one. Wow.
Yeah, that would be the thing. Don't get me wrong, it would be fun to come down to something like The Price is Right or something of that nature walking in. But those two words would be pretty solid in my book if I heard that.
I think that's a good thing to hear at the pearly gates. That's definitely a good thing to hear. Well, listen, I enjoyed our time together. I really had a blast. Thanks for explaining everything out on a complicated subject and keeping it simple. If anybody has additional questions on title or they need to do a search or something, what's the best way to contact or how should they reach out, or if they have more questions or anything?
Sure thing. The best way to reach me is probably my cell phone, 856-366-8097. Also, I have my email address you can always reach me on, but I would always say cell phone's best. That's bmcgroarty@coretitle.com. And if you'd like to reach Core Title directly, that main number is 856-316-4644. 888-888-4005. Either way, we all work as a big team, so if you need to reach out to me, you have some questions about title insurance, or even just want to talk a little shop, I'm always happy to be a resource.
Awesome. I appreciate it. You have a great day. We're going to have a massive June. I'm sure you guys are twice as busy as we are. And I'll see you over at 1300 Route 73 pretty soon.
Yes, sir. Thank you for having me. It's a pleasure.
You got it, man. Take care.
Take care.
Thank you for tuning in to this week's episode. If you would like any additional information, please contact us at Team Clyde Realtors on Instagram or Facebook, or you can send us an email at Steven@TeamClyde.